Are you tired of writing massive checks to the IRS every year only to wonder if your CPA missed something? You're not alone. Most entrepreneurs overpay in taxes simply because they were never shown what's legally possible. I'm Gary McDermott, co-founder of Pro Growth Solutions, and we help business owners reduce taxes, structure their entities, and build long-term wealth. Today, I'm going to reveal a strategy that lets you legally pay your children, spouse, or even grandkids through your business while reducing your tax bill and building wealth for your family. Here's what we'll cover. The number one mistake when paying family members. How your kids can earn up to $14,600 tax-free in 2025. Why paying your spouse could backfire. Using this strategy to fund Roth IRAs and the family management company workaround for S Corp and C Corps. If you're serious about reducing your tax burden and building long-term wealth, I invite you to book your complimentary tax strategy assessment using the link below. Most firms charge over $1,500 for this, but we're offering it at no cost so you can see firsthand how proactive tax planning can transform your financial future. All right, let's get into it. If your child works in your business doing legitimate tasks like filing, design, or social media, you can pay them a wage. And in 2025, they can earn up to $14,600 tax-free, thanks to the standard deduction. If you're a sole proprietor or in a partnership with your spouse, the IRS allows you to avoid Social Security and Medicare taxes on their wages under IRS Code Section 3121B3A. That means no FICA and no income tax. That's a double win. Just remember, documentation matters. Keep job descriptions, hours worked, and proof of payment. And yes, this must be real business work, not household chores. Here's where it gets even better. Once your child has earned income, they can contribute to a Roth IRA, which grows tax-free for decades. I've seen families shift $29,000 to 2 children, deduct it from the business, and use that money to fund 2 Roth IRAs, setting them up for long-term compounding growth. Now let's talk about your spouse. A lot of business owners think putting their spouse on payroll will automatically save them money. But if you file jointly, that income flows right back onto your tax return, and you'll still owe payroll taxes. So unless it's structured for a clear purpose, like maximizing 401k contributions, it could actually increase your tax bill. When done correctly, though, paying your spouse can shelter more income and speed up your retirement savings. You can also pay adult children and grandkids, but classification is key. Use a W-2 for employees or a 1099 for independent contractors, depending on how they work with you. Avoid the temptation to misclassify them just to skip payroll taxes. That's a red flag for audits. When structured properly, your family gains earned income that can fund Roth IRAs, Coverdell accounts, or even their own investment portfolios. You're not just saving on taxes. You're teaching them how to earn, invest, and build wealth early. The S Corp and C Corp workaround. If you operate as an S Corp or C Corp, you don't qualify for that payroll tax exemption for your kids. But there's a workaround that smart families use. Create a family management company, a sole proprietorship, or single-member LLC owned by you or your spouse. Your main business pays that management company a legitimate fee for services, and the management company pays your kids. That setup restores the FICA exemption legally. Just make sure it's all documented properly and the services are real. And yes, this strategy applies to your grandkids too. If they do real work for your business, they can earn income, open a Roth IRA, and start investing while they're young. That's how you build multi-generational wealth, legally, strategically, and with purpose. So here's my challenge for you. Take a look at your last tax return and ask yourself, did you pay your kids, your spouse, or your grandkids for the real work they do? If not, you might have left thousands of dollars on the table. Don't let it happen again. Claim your free tax strategy assessment today at progrowthsolutions.com. We'll show you exactly where your money is leaking and how to redirect it back to your family and your future. Before you go, tap like, hit subscribe, and tell us in the comments which tax tip surprised you the most. Together, let's keep more money in the family and build wealth for the next generation.